Do you want to keep more of your hard-earned money and learn how the wealthy pay less taxes even though they make more money? Are you tired of paying high taxes? If you nodded yes to either of these questions, then you've come to the right place. The world of tax laws is complex and can be daunting, but it's also filled with opportunities. Welcome to my channel, and if you're new here, please hit the subscribe button, and if you're returning, you are greatly appreciated. Today we will discuss opportunities that can help you keep a larger portion of your earnings legally. Understanding tax laws and how to navigate them is an invaluable skill. It's like having a secret key that unlocks a treasure chest. But instead of gold and jewels, this chest is filled with deductions, credits, and savings opportunities. Today, we'll break down this process into easy-to-understand steps. By the end of this video, you'll have a solid grasp of how to use tax laws to your benefit. You'll see that they're not just rules to abide by, but tools to help you keep more of your money. Knowledge is power, especially when it comes to reducing your tax bill. First things first, you need to understand your tax bracket. Now, what exactly is a tax bracket? It's essentially the rate at which your income is taxed. The more you make, the higher your tax bracket. But here's the thing, not all of your income is taxed at that highest rate. Only the income above a certain threshold falls into the higher tax bracket. So, why is this important? Because by planning your income and deductions, especially if you are self-employed, you could potentially lower your tax bracket. This might involve timing when you receive income, or when you make certain deductible expenses. It's all about strategy. For instance, if you're on the edge of a tax bracket, you could try to push some income into the next year or increase your deductions for the current year to keep your taxable income lower. By understanding and strategically planning around your tax bracket, you can significantly reduce your tax bill. For more details on tax bracket, visit irs.gov and search for tax bracket. Also, don't forget to involve your accountant on these discussions. Next opportunity to reducing your taxes is through tax deductions. Tax deductions are a brilliant way to lower your taxable income, and there are numerous deductions available to you, depending on your circumstances. Let's delve into some of the most common ones. Mortgage interest is a big one. If you own a home and have a mortgage, you're likely paying interest on that loan. The good news? That interest is often tax deductible. This can significantly reduce your taxable income, especially in the early years of your mortgage when your interest payments are highest. Next common deduction is through student loan interest. If you're paying off student loans, you might be eligible to deduct the interest you pay on those loans. It's a small way the government tries to alleviate the burden of student debt, and while it might not seem like much, every little bit helps. Business expenses are another big area for deductions. If you're an entrepreneur or a small business owner, you have a whole world of potential deductions at your fingertips. Everything from office supplies to business travel to a portion of your home if you use it for business. It's crucial to keep meticulous records of these expenses, not only to validate your deductions if the tax man comes knocking, but also to ensure you're not missing out on any potential deductions. And that brings us to a crucial point about tax deductions: documentation. Keeping good records is essential. Whether it's receipts, bank statements, or mileage logs, having solid proof of your expenses is key. Without it, you may find yourself unable to claim deductions you're entitled to, or worse, facing penalties if you can't substantiate your claims. So as you navigate the labyrinth of tax deductions, remember, knowledge is power. The more you understand about the deductions available to you, the better equipped you'll be to leverage them and lower your tax bill. Remember, every dollar you can deduct is a dollar less you're paying tax on. So, make the most of your deductions and keep more of your hard-earned money in your pocket. We've covered tax deductions, but what about tax credits and retirement savings? You see, tax deductions reduce your taxable income, but tax credits? They're a dollar-for-dollar reduction in your actual tax bill. Quite a difference, isn't it? Let's explore a couple of common tax credits. First, the child tax credit, which provides a credit for each qualifying child in your household. Then, there's the earned income tax credit, designed to help lower-income working individuals and families. These credits can significantly lower your tax bill, sometimes even leading to a refund. Now let's shift gears to retirement savings. Contributing to retirement accounts not only helps secure your future but also reduces your taxable income. Each dollar you put into traditional retirement accounts, such as an IRA or a 401k, is pre-tax, meaning it reduces the amount of income you're taxed on. By taking advantage of tax credits and saving for retirement, you're not just reducing your tax bill, you're investing in your future. So we've covered a lot of ground today, but what does it all mean? Well, let's break it down. First, we've learned that understanding your tax bracket is fundamental. This knowledge can help you make informed decisions about your income and expenses. Secondly, we've seen how utilizing tax deductions can significantly reduce your taxable income. By taking advantage of these legal provisions, you can save a considerable amount of money. Thirdly, we've explored the power of tax credits and retirement savings. By investing in your future, not only do you secure your golden years, but you can also reduce your current tax burden. In essence, we've learned that tax laws are not just about paying money to the government. They're about understanding how the system works and using it to your advantage. And there you have it, folks. How to avoid overpaying on your taxes legally. Remember, the goal is to pay only what you truly owe. And with the right knowledge, you can do just that. If you found this video valuable, subscribe, give it a thumbs up, share it with your friends, and comment below with any questions you may have. Thanks for joining us today on my channel. Until next time, live abundantly.